Consumer confidence falls to its lowest level in a year and a half. I'm Lisa Bernhard with Reuters, and joining me today is Liz Miller. She's president of Summit Place Financial Advisors. Okay, Liz, let's look at data from the conference board today that showed the consumer confidence index fell to 97. That's its lowest since July of 2022. Now, the economy, we've talked so much about how resilient it is. There's jobs, people have money in their pocket, they're spending. So why is confidence falling?
I think there's a mix of reasons we're seeing these low confidence numbers, even as it was moving above to that 103 that was expected. It had been a long journey there. And I think we just are getting consumers thinking more and more in the moment and less confident looking forward. So the confidence survey asks a variety of questions. How do you feel today? What do you think in the future? And all of them are turning more negative, even though when we look at the everyday data, things are going well. So I do think there's a disconnect between what people are reporting in these surveys and what they're doing day in and day out. But if you think about the average day for a consumer right now, they're spending more at the grocery store, they're spending more at the pump, they're spending more to go out for an evening of dinner. And I think that's what we saw in this report.
Okay, Liz, let's switch to earnings because we saw McDonald's today missed its quarterly profit estimate for the first time in 2 years. So in these inflationary times, you would think that McDonald's would do well. So what's going on?
I think we're seeing across the board, and today was a huge earnings day. And, McDonald's and all of these companies had one reaction earlier in the day as the market opened, and then everything turned topsy-turvy when we got that consumer confidence report at 10 a.m. But McDonald's did not have that bad of a quarter, actually. But yes, it was the first time they've missed earnings in a long time. And the same-store sales were pretty good, actually, particularly in North America. And the outlook is okay. But they are struggling with some pricing. They talked about some new products that they are working on and that they think are going to be positive going forward. But what we saw in the quarter was what we're looking for with everyone, that mix of, very modest unit growth with pricing going through and what that does to those same store sales and to demand in a product that is meant to be some of the lowest cost food you're going to buy out there.
So on the flip side, Restaurant Brands, which owns Burger King, had strong earnings today. So talk us through that.
Right. Same kind of business. And we saw Restaurant Brands with a win. We see the market giving them some reward for that. That's been sticking through the day. It wasn't their Burger King outlets that did well. It was Popeye. And it's all the same game for these guys. Popeye comes in with 2.5% US comp growth, same store sales, really positive, but they're all struggling with the same thing. So for Popeye, you got the unit growth along with the pricing power. Perhaps their products had more pricing flexibility with the focus on chicken instead of on beef, but all of the fast food outlets are struggling to keep a business going with the same idea. Can they put through some pricing increases while still getting their core consumer to be able to afford the restaurant meal out? Right now, Restaurant Brand showed they could do it this quarter. We'll see if it continues.
And you might want a Coca-Cola with your burger at one of these restaurants. So we had Coke earnings today, strong demand, right?
Coca-Cola actually had a really good report, but as the market digested it, it sort of shrugged and the stock is down a little bit on the news. But really, when we think about beverages, I was pretty pleased by the report. They got a little bit of organic growth that was on the unit side. So we don't always see that. We saw strong revenue growth, but 13% of that revenue growth was both on mix and pricing, meaning getting consumers to a more profitable product as well as a higher price product. And the market was looking for a little bit more on the organic growth side there. They also have a very international business. So they were showing the difficulties of the different currencies and the pricing power going through, very high pricing changes in Latin America versus North America. And I think the question mark was, how sustainable is that? And let's keep seeing that unit growth come through.
So in other earnings news, shares of Eli Lilly, the drug company, are up today because huge demand for these weight loss products, which are very, very expensive in these inflationary times, right?
Yes, very interesting to look at the strength in Lilly and the reward it's getting in the market on this difficult, choppy market day against what really is pretty good results from the fast food stores that those outlets were not really getting the love in the market. Lilly having a very strong quarter and very much driven by these weight loss drugs. Their big one being Mounjaro, similar to an Ozempic that a lot of people know. And these are proving to be very successful and very high demand. Now, Lilly and its competitors are getting the pricing for these. They're very high priced drugs. And even those who aren't getting them covered in the country, more and more are thinking to themselves, well, I'll save some pennies so I can get a prescription maybe just for a month, maybe just for 6 weeks, and I'll spend $1,000 for this prescription on the hope that it can help me lose weight. We know that any weight loss drug, any weight loss strategy that's successful, just has unending demand in America. So we're just watching how long this will last and how long the companies will be allowed from a legal perspective to maintain that kind of high pricing power.